Is the palpable fear gripping the cryptocurrency market making you question every investment decision? Today, the crypto fear and greed index plunges to a staggering 12, signaling extreme fear. While the majority of retail investors succumb to panic, selling their holdings in a frenzy, true smart money observes this capitulation as a rare, highly coveted opportunity. They don't just survive in these turbulent conditions, they thrive. This session will dissect their counterintuitive strategies, empowering you to adopt their mindset and transform your fear into a calculated blueprint for enduring profit in the volatile world of crypto. Extreme fear is not just a sentiment. It's a measurable phenomenon reflected in indices like the Fear and Greed Index. A score of 12, deep in the extreme fear zone, signifies widespread capitulation and despair among retail participants. They operate on raw emotion, driven by the primal urge to avoid further losses, often selling at the absolute bottom. However, smart money, institutional investors, whales, and seasoned traders, approaches these market conditions with a starkly different lens. They perceive this panic as a profound market inefficiency, an imbalance between intrinsic value and perceived value, thereby creating incredible opportunities for accumulation at discounted prices. They understand that market cycles are an inherent characteristic of financial markets, particularly in nascent asset classes like crypto. Just as greed propels markets to euphoric highs, fear drags them to capitulatory lows, forming prime buying windows for those with foresight. Smart money meticulously plans for these downturns, allocating capital strategically and patiently waiting for assets to become deeply undervalued relative to their long-term potential. This calm, analytical approach is their defining characteristic. They are not selling into the panic. Instead, they are quietly, deliberately, and systematically accumulating, exploiting the emotional selling of others. This is their undeniable advantage, echoing the timeless wisdom. Be greedy when others are fearful, and fearful when others are greedy. To truly trade like smart money, you must learn to decipher their subtle yet significant market movements. One of the most powerful tools available in crypto is on-chain data. Pay meticulous attention to large whale transactions, movements involving hundreds or thousands of Bitcoin or Ethereum, often from exchange wallets to cold storage. These significant wallet movements frequently signal long-term accumulation, as these large holders are moving assets off exchanges, indicating an intent to hold rather than sell. Furthermore, monitor exchange net flows. Consistent outflows of major assets like BTC or ETH from centralized exchanges often suggest that smart money is withdrawing coins for holding, reducing circulating supply available for sale. Conversely, a rising stablecoin ratio on exchanges indicates a significant amount of dry powder waiting to be deployed, often a precursor to buying sprees. Beyond on-chain, observe specific price action at key technical levels. Smart money frequently orchestrates what's known as a liquidity sweep or stop-loss hunt. They intentionally push prices just below major support zones or previous swing lows, triggering a cascade of retail stop-loss orders. This creates a surge of forced selling, which they then swiftly absorb, buying up cheap coins from fearful sellers. These events are typically characterized by a sudden, sharp dip followed by a strong rebound on unusually high volume. Look for volume spikes on these deep corrections. High volume during significant downward price action, particularly at historical demand zones, often signals heavy institutional buying. These patterns frequently form order blocks on charts, which are concentrated areas where large buy orders were executed, absorbing significant selling pressure and marking strong demand zones. Smart money also retests previous resistance levels as new support, confirming the strength of a new demand area. Identifying these liquidity grabs and order blocks are critical for spotting smart money's true buying zones. Now, let's translate this understanding into actionable trading strategies, structuring your trades with the same precision as smart money. First, meticulously define your entry points. Don't chase pumps. Wait for clear confirmation of accumulation. This could manifest as a failed new low, where price dips below a previous structural low but immediately reclaims it, often with strong bullish divergence on indicators. Or it could be a powerful rebound from a clear liquidity grab, where smart money's buying pressure is evident. Seek a confluence of multiple signals, on-chain data validating price action, before committing capital. Second, and absolutely non-negotiable, always set your stop loss. This is your ultimate risk management tool. Place it strategically below a key structural low that would invalidate your trade setup, ensuring your downside risk is strictly limited. Understanding your invalidation point is paramount. Third, determine your take-profit targets with equal rigor. These are often identified at previous supply zones, where significant selling pressure previously emerged, or using Fibonacci extensions from your accumulation range. Aim for a favorable risk-to-reward ratio, ideally 1 to 2 or 1 to 3, meaning for every dollar you risk, you stand to gain 2 or 3. For example, if you risk 1% of your total portfolio per trade and your stop loss is 10% away from your entry, your position size adjusts to ensure only that 1% is at stake. Crucially, start with smaller positions and scale in gradually as your conviction grows and the market confirms your thesis. Avoid the temptation to go all in at once. High volatility demands caution and strategic deployment. Protecting your capital is the paramount objective, allowing you to participate in future opportunities regardless of individual trade outcomes. While technical analysis and on-chain data are vital, mastering your psychology is the ultimate edge in crypto trading. Extreme fear, like the current market conditions, tests everyone's resolve, but smart traders remain steadfastly calm. They achieve this by detaching emotions from their decision-making process, a skill cultivated through discipline and adherence to a predefined trading plan. This plan, meticulously crafted during periods of calm and rationality, acts as an objective guide, preventing impulse decisions driven by panic or greed. Panic selling is a purely emotional, often regret-inducing, response to volatility, whereas smart money understands the cyclical nature of crypto markets. Downturns are not anomalies. They are inherent, healthy parts of the market's journey, clearing out excess speculation and setting the stage for the next growth phase. Patience, therefore, becomes a powerful virtue. Do not rush into trades. Wait for your precise setups to materialize, trusting your thorough analysis over fleeting market sentiment. Focus on the long-term fundamental value of projects, not just short-term price fluctuations. This counterintuitive approach, buying when the headlines are dire and selling when euphoria is rampant, is what consistently pays dividends, allowing you to truly buy low and sell high. Develop mental resilience by acknowledging your biases, practicing mindfulness, and consistently reviewing your trades without judgment. Train yourself to perceive the underlying opportunity in chaos, understanding that these periods of deep fear are where generational wealth is often quietly built. In conclusion, extreme fear in the crypto market is not a signal to retreat, but a unique, time-sensitive opportunity for those equipped with the right mindset and strategy. While retail investors yield to panic, smart money leverages advanced analysis, identifies precise accumulation zones, manages risk with unparalleled discipline, and maintains an unwavering, rational mindset. By diligently adopting these smart money concepts, understanding market cycles, interpreting on-chain data, structuring trades with precision, and mastering your emotional responses, you can transcend the volatility. You can transform what appears to be a threat into a formidable strategic advantage. It's about thinking differently, trading smarter, and positioning yourself for the inevitable recovery and growth. If this deep dive has empowered your crypto journey, consider subscribing for ongoing insights and market analysis to stay ahead in this dynamic landscape.